What's up, everybody? Altin here. Today, I'm going to show you the technicals I use and explain what they do. So, first off, I'm using this is TradingView, and I am going to teach you guys about the moving average. So, you see, I have five numbers over here: 10, 20, 50, 200, and 100. You can also use 150, but they they limit you using five indicators on this program. So I'm gonna use these five. These are fine. So to change them, you hit the settings. The length is what I'm changing. So the length can be 10, 20, 150, 150, and then 200, depending on how you want it. I always have it on closed, no offset, same chart style. You can change the colors, but I'm gonna show you now. This is the chart of the silver to ounce to USD, because everybody is talking about a silver squeeze, and I will have another video coming out today actually about what I think about the silver squeeze. And I'll be honest, I don't know too much about it, but in hindsight, silver could be worth a lot more than what we all think it is. So let us start off with what the 10 is. So the 10 is this dark purple line, and it's from the close of the last 10 candlesticks. That is the average of the last 10 candlesticks closing. And then so on and so forth, the 20, the 30. As you can see, it jumps a lot when, because this is the market closes the weekend, and then it gaps up. This opens on Sunday like 6 p.m. It's a little different with these, but it's just the same thing as a stock market. It's just a little different. But these all work in the stock market as well, just as similar. And this is also why I like using not using extended hours, because if you don't use extended hours, you get this, and as you can see, it tries to fight up, but it's not able to. This is the 15 minute, by the way. It tries to fight up, but it's not able to. And once it reaches this 10 MA, it broke below it, but then it broke above it. You see how the spikes are massive compared to like the normal ones when these lines are involved. It's because people do use these lines to trade a lot. And as you can see, it was hugging this a lot on the 15 minute, the 20 and the 10, and then it pushed it up, but then it wasn't able to go up anymore. So it's trying finding these lines again. See, it broke down the line and it bounced back up, broke down, bounced back up, and it couldn't break it. So it went down to test the 100, couldn't break the 50, and then these both crossed the 50. So there's a whole this is moving averages. There's a lot to it. It's not just a bunch of lines and like it's fighting above and below the line. There's a whole bearish and bullish side to it. So for each line that's above the line it's supposed to be up. So the 10 is above the 20, above the 50, above the 100, above the 200. That's bullish. So for each line the 10 is below, the more bearish it is. So the 10 is only below the 20 and it's still above the rest. It's still really bullish, but it's slightly bearish. And then if the 20 and the 10 are below the 50, then it's considered bearish. If the 10, 20, 50 are below the 100 or the 200, the more bearish it is. If everything is below the 200, then it's really bearish, because that means the averages have been below for a while. The candlesticks have been below this for a while. But as you can see, like here, this would be a perfect example. You see on the 15 minute, it broke the 200 like right here, and you can see it tried fighting it, it couldn't, so it just broke it down and then tried saving itself. It saved itself over the 50. The 50, the 10, the 20 both broke over the 100, which is a good sign. So it tries to test the 100 again. It tested, perfect. It broke the 200, and all is good and dandy. Everything is bullish, but is it? The buying wasn't strong enough, and as you can see, the 50 was so close to crossing the 200, which would made it a little bit more bullish. But remember, just because everything is bullish doesn't mean it's always going to end up bullish. This is why it's just making your 50-50 risk on trading. This is for trading mostly. This doesn't matter at all for long term. It's more for trading. So it makes your 50-50 trading into maybe 60-40. Made the chances are more on your side. But it failed. As you can see, it broke down pretty strongly. and then the sell off endured, and then you see it kept bouncing up, kept testing the 200 on the 15 minute, and it broke again down, and then as you can see, massive buying right here. And this is when, like, when you'll see massive spikes is when the lines are really close to each other and the trading is really close. And then if volume increases, so if more people are buying or selling, it can spike down or up depending on buying or selling, of course. And then the wider these get, the more they're going to be used for supports and resistances and whatnot. So as you can see, the 10 is about to cross the 20 again, which would make this slightly more bullish. Doesn't really matter. There's you can use this on any time chart. I like to use this all the time, every time I'm looking at stocks, just as like a, I don't know, it gives me a little bit more, sensitive to what's happening, what's the averages. And that is pretty much it for the moving average side of it. There is a lot more to what I'm going to show you today. So you got the we go to indicators. The MACD is what I love to use. Also, this is pretty much just the momentum. So it's the momentum of how the stock is going. When this blue line right here is below this yellow line, that means it's more it's the momentum is more negative and it's more towards selling pressure. There are people who literally will only buy when the MACD turns green and sell when the MACD turns red, and they'll over the years profit. Sometimes they don't, sometimes they do, but it's usually not a huge amount. It can be depending on what you trade, but I love using the MACD just because if you, for the 1 minute on this chart, it doesn't really help because look, you see how it's red. I mean, yeah, it's just selling off, but then by the time it turns green, when it turns green, it doesn't really go up that much, And then it does, and then you see the darker green on this chart. Some charts don't really have this, but this one does. You see the darker green means this it's larger than the last one. The lighter ones means it's smaller than the last one. Same thing with the red. It just means the movement is either growing or shrinking. So that is that. And then you go to the 5 minute. And this is gonna be so for every time, the bigger time per candle, so 4 hours versus the 1 minute, it's going to be more important. These lines, the moving averages, the MACDs, the RSIs I'm going to teach you next, they're going to be more important because it's harder to manipulate, or I put in quotations manipulate, because it's not legally, I don't think they're manipulating the stock, but you know how these hedge funds can be. They manipulate those like technicals, which will make like short-term traders very like scared. But if you're looking at like MACDs, like, and moving averages, the higher the time per candlestick, the more important they are. So you see this turned green again after being red for a little bit. But does that mean it's gonna go up? It could not. Let's look at the other things. This one's getting really close to turning green. When it turns green, as you can see, every time it turns green, well, you can see for yourself, it tends to go up. But as you can see, just like a stock chart with these lines, there is like you can kind of see double bottom sometimes with these blue and yellow lines in the MACD. Sometimes there's a top, like this could be considered a top right here, because this is leveled out, and this could keep going down, open down on the 1 hour, but you never know. This is why people tend to only buy on the green. So if you look at the 4 hour, it's green, and these are such a wide gap that it's going to be very, like, it just has to sell off pretty hard for it to even go down a little bit. But these this is what you could use if you want for so, and if you look at the dailies, obviously dailies mean more important. Like, it's probably a great time to get in. I'm not saying to get in, I'm not a financial advisor. Don't make your own decisions, but this is what I like to use. See, MACD just turned green on the weekly. What happened last time when it turned green on the weekly? And the fact that it turned green so far up because you see how these lines are above these, and it means it's more bullish, because it's typically harder for it to go up, for it to cross. But you see sometimes it does cross up, and then it, like right here, it crosses up, and then it tanks right after because it's not able to fight. It's harder for, certain prices to stay up for certain times. But another great view of this MA is look at the 50. Look how it trades to fight the 50 on the weekly. Right. This is very strong. These are gonna be very, very more. These are gonna be more important than any minute chart in your world. So you see, it's gonna be fighting the 50, and then finally breaks the 50, breaks the 100, tries to fight the 200, and fights the 200 for, look, this is not a short time period. This tries to fight the 200 from June of 2016 all the way to June of 2018. 2 years straight, it's trading in this range. 2 years straight, it couldn't break this range. It couldn't break the 200. That is very bearish if I've ever seen anything. And then it falls in September because it's not able to. Why would you hold or buy something that's not breaking the, very, very important. The 200s, my opinion, is considered one of the most important, especially if everything else is under one of the most important moving averages. And then so it breaks down, and it tries to recoup itself. This with the MACD will help you see the momentum, and if a break is really gonna break. You see how like these are little tiny, like, this is nothing. This is not really momentum. This can be really ignored at this point. When the movements start to really happen like this, that's when you really should pay attention, because they're bigger, wider, more momentum. As you can see, it breaks the 200. It bounces off of it. You think it's going to go up? Nope. It broke down during the March crash, which in hindsight, if money is getting printed, why would you sell silver or gold? I don't know. But people bought it up, and well, as you can see, we could be on a new bull run for silver, but that's another video. And then now we're gonna go to RSI. So this is a relative strength index. There's a lot more to all of these like MAs and everything. Is that I'm just like, it's kind of like, giving a gist of everything, but I will definitely do more research before you look into these things. But I'm just giving you like a beginner's guide to what these are. So if somebody shows you charts, you kind of know what they are, but there's a lot of math behind a lot of this, and it can be very confusing. So I'm trying to like dumb it down a little bit. So for the RSI on the minute chart, might not be as important. Also, as you can see, it stopped trading because futures stopped for a little bit, for between like 5 or 6, I think. So like don't worry about it. But you can see like this just makes it clear for you to see double bottoms and like different technical things. Because look, if you see this doesn't look like a double bottom to me on the candlestick, but if you look at the RSI, you can consider that to be a double bottom before it climbs up. And then so for this though, now this is where it kind of gets confusing, because there's a lot of people who use a lot of different things for the RSI. Above 70 means it's overbought. Below 30 means it's oversold. Overbought meaning bearish, oversold meaning bullish. You want to buy when it's oversold, you want to sell when it's overbought. But this is where it is very confusing, because I can show you a billion places where it's oversold and it'll stay oversold for a while, or it's overbought and it'll stay overbought for a while. So this is why you use this mixed with a bunch of other things to really find out what to do. But the further in time you go, so the 5 minute, whatever, obviously the more important it's gonna be. But in my opinion, do your own research. Like I said, above 50 is bullish, and if it can stay above 70 and doesn't break below 70, it's still bullish. But once it breaks 70, it has to stay above 70 for it to stay bullish, at least for the short term. So like you can see this gap up right here that happened. You see it, the RSI is at 90, which is overbought to the max, and it still went up. It still went up, but the RSI is lower now than it was here because of this sell-off. Sell-offs in the overbought area really make it like really drop the RSI a lot. And then as you can see, a sell-off occurred again, and they tried to save it, but no, So the RSI finally went back into regular regions and like normalized a little bit. But the most, a lot of people, there are a lot of different speculations about RSI. Like you see how this is oversold right here. They say it can be bearish below 50, and if it's above 50 but still like bearish, the price is still going down, it's technically overbought. Like if it's between 50 and 60 on while it's still going down, it could be overbought. I'm gonna try to find a moment where some people will consider that. Like you see how it drops a lot here and then it becomes oversold and then it gets bought back up. This can be considered overbought. Technically speaking, if you want to, it can be considered overbought because this is still bearish. The price is still like down. But like I said, technicals is like astrology. It's very hard to make any sense of it sometimes, but obviously the further out you go. So let's go to this 3 hours. Nobody looks at 3 hours. Let's go to 1 hour. See, it looks like gibberish to me, honestly. Like it's breaking above the overbought area, but it's still, you see how it's still above this 50 mark, which is right here. It's bullish still. And you see it's like it's making a new high, new high, new high, new high, and then it flattened out. You want to keep an eye on those, and it's just, these are like trial and errors. You really want to go through like different charts, look what happened last time. Like, see, this is at the peak it was at last time before it went down, but look how that it was way overbought back then, and it's not overbought at all now. That means if this goes overbought to where it was before, like in the 85s, this can probably go up to like 35. That's what you want to see. You want to see the RSI to cool down like it did like it did here, but the price range to stay, and then eventually the price will go back to where it was before when it was way overbought. But this time, it's not. And that's where RSI really gets important. That's where, because you would want to buy in around like this range when once it turns green, right? But you wouldn't want to buy right here because it's overbought. Even though it went up so much, still, it's much riskier. But you can see how when I say it's bullish when it stays above 70, because look how long it stayed above 70, and look how much the price increased. Almost 50%. It's just some food for thought. I hope you guys enjoy this video. I will try to make a video today about this silver rush, and I hope you guys enjoyed. If you have any questions, leave a comment below or hit me up on my Instagram. Instagram's in the description. Let's see you guys next time. Peace out.